Yes, good evening and welcome to the session once again. Now the session I'm going to concentrate now is bank revenue leakage. That is bank. In the bank, what is the revenue leakage? What are the important items that you have to see that we are going to have discussion now. And we will go for the presentation. Why the revenue or checking is important. So that is in the LFAR, they are given this as the test checking of interest, discount, commission, fees, etc., revealed excess or short of material amount. So they say that in revenue audit, in the revenue leakage in LFAR, they indirectly say that you can do the test checking. So they use the word test checking. Okay. So that means you should have proper working note. You should have proper working note. So what are the items they are you are test checked in the form of interest, discount, commission, and fees? Everything you should have working sheet. And if there is a extra short and credit of material amount, what is a material amount? Suppose if the leakage is more than 10,000, you can give. Suppose if it is only 1,000 or 300 or 400 rupees, you can leave it. But you should have the same thing in your working paper. If you want, you can give all the items that you have found out during the audit, and they say that it's a material amount. Material amount is not defined anywhere in this LFAR. So this is the first thing that you have to see. Next one is, as the branch complied with the IRAC norms prescribed by the RBI, the auditor may refer to the instruction of the controlling authorities of the bank regarding the charging of interest on non-performing asset. Here, one thing is, this is a specific question that whether the NPA has been identified properly or not. And one very, very important thing is, after identification of NPA, the branch, they are not supposed to charge any interest into the account. That if the another working is, you have to remove the unrealized interest from the account. All this we will see tomorrow morning. That is when I took the NPA in full shape, so you can easily answer. Here, the word is test checking of interest. So this is where the LFAR has given us cushion. And again, has the test check of interest of deposit reveal any short or excess of the material amount? Here I want to tell my experience. It's a very good experience that I have got. See, in one of the nationalized banks where I have gone for statutory audit, I found that see, that's a reinvestment deposit. That's a reinvestment deposit. Every year they have to provide the interest provision. So we are certifying true and fair view. We are certifying true and fair view. But for that, we have to take we have to be very, very careful whether the profit shown in the P&L account is correct or not. So a reinvestment deposit, the branch has to make the provision. So when I test checked the interest, I found that in almost some 20 accounts, in some deposits, the bank, they provided excess interest. In some deposit, they provided less interest. So that means they have not provided the correct interest. So I once again checked the real working. Then I found that the system rounds interest rate instead of interest amount. This is a major thing. If it is 12.25, it gives provision for 12%. If it is 13.75, it gives provision for 14%. So there is a difference. So you have to see whether the interest provided into the account is correct or not. In my case, the system rounds interest rate instead of interest amount. So actually the interest amount can be rounded off and not the interest rate. So here I want to say that this is a major mistake that I found out in that bank when I reported this, and the actual leakage, that is actual bank as a whole, they made short provision of something around 580 crores because of this finding. This is one of my audit findings. So this point you have to remember. You have to test check all the interest deposits. Here I want to tell the important thing.
Sir, sorry to interrupt. Sir, sorry to interrupt.
Yeah.
In case of one case in NPA case, last year they recognized as NPA. Now, there are two questions related to this. Number one, we found some instances where these NPA cases also revenue is recognized in the books, for which we had to issue MOC. That is number one. Number two, what is the logic once a particular program was mapped such a way that if any advances became NPA, revenue should not recognize. But how come in violation of that rule and how system automatically pick interest? Is it manual interference or system generated? Now, that is number question number one. Question number two, how to identify these type of cases when we do on a random basis, we find out, but how scientifically we can find out these type of instances? Thank you, sir.
Sir, okay. Actually, NPA you have to identify first. Okay, the system may provide, say it can use, normally it provides provision. And the thing is, when you identify one account as NPA, no further interest has to be charged and the unrealized interest of the earlier years have to be removed. And previously, there was no clear-cut information, but circular dated 1/10/2021, it says that you have to remove all the unrealized interest from the past period. That means from data opening to now, you have to remove the unrealized interest. And this working tomorrow, I'll tell. And this is a very, that is why I said NPA identification is very, very important. And particularly, you should know the technique of the calculation of unrealized interest. So this is a very, very important thing. Tomorrow I will give the answer for your question, Hemant sir. And my request is you please concentrate, you ignore the NPA questioning, you concentrate on revenue leakage. Okay, sir. And does the bank have a system of estimating and providing interest accrued on overdue, matured, unpaid, unclaimed term deposits, including in respect of the deceased persons? So here, they use the word interest accrued on overdue and matured. Overdue and matured. That is on matured deposit, the bank, they have to make the provision. And this deposit will be reversed or paid only when the deposit is renewed. If it is not renewed, further interest will not be paid. But this is subject to the bank's service charges circular. And in case of overdue deposit also, the system has to renew it. And if it is not renewed, further interest will be paid only when the deposit is being renewed. And unpaid and unclaimed term deposit means, unpaid deposit means deposit claimed and it is not being paid by the bankers, maybe due to that disease claim. And unclaimed deposits are the owners are not confirmed. So how the bankers, they are providing the interest. For that also you have to do the test check working, but you have to do the working when case by case. Case by case, you have to accept it. Next one is, what is the extent of checking? Audit, they specifically mention it is a test check. In concurrent audit, it is 100% or test check as per the appointment letter. As per the appointment letter, you have to do it. In revenue audit, you have to do 100% checking or test check as per the appointment letter. So this is the extent of checking, but in statutory audit, you have to do only the test check. And if you find anything mistake, so you can go depth into the transaction. And next one is the areas of in profit and loss account of the first we are going to the income side. What are the income side? It is nothing but a cut paste copy of the P&L account of the balance sheet, interest collected on advances, interest collected on interbank funds and brokerage, other receipts, profit or loss on exchange transactions. This is very, very important. Profit or loss on exchange transaction. Normally, it will be applicable for the forex branches. Now, going to what are the base areas to be seen is bank service charges circular. So you have to ask, even before going to the audit, you can ask the bank service charges circular or letters. For this, if you have appointed any for say IOB, you go to your nearby IOB branch and get the service charges circular so that you can update the knowledge. So before going to the branch also, you got the right time to read everything. And if you go to the branch and if you receive the service charges circular, then it will definitely consume it. And even I can vouch, you will get these bank service charges circular in Google. You go to Google and type IOB's service charges circular. You will get the list. And only the updation is required, but basic things you will get from the site itself. Next point is interest rate change with reference to deposit advances. So during the year, there will be a lot of changes in the deposits advances. This is directly related to change in repo rate. So if there is any change in repo rate, you can find the change in the rate of advances, a change in the rate of deposits, So that is after announcement of repo rate change, within a day or two, you will get the same change in the circular. So you can take note of it. So you go to RBI site and take down what are the dates that repo rate has changed. So the repo rate is a rate charged by the RBI on banks borrowing. That is, if any commercial bank has borrowed funds from the RBI, then RBI is charging interest. That interest is called as repo rate. And the reverse repo rate is the interest charged by the commercial banks on RBI. Sometimes RBI is borrowing money from the commercial bank. For that, the commercial bank, they are charging the repo rate, so that you can easily identify. So based on the repo rate change, you can find the difference in deposits and advances. And next one is sanction letters for each loan. So the interest rate is fixed on these letters. So that means for each and every advances, you have to go and refer the sanction letter. What is the interest rate? What is the PLR? Whether it is PLR plus 3 or PLR plus 4, everything that will be there in the sanction letter. From the sanction letter, based on which you have to arrive at the interest. Next one is previous auditors report in case of bank branch, or that is in case if any statutory audit is being conducted in the last year, whether the last year statutory auditor has given any income leakage or by the concurrent auditor or revenue auditor. If there is any revenue audit, whether any revenue leakage has been pointed out by the revenue auditor, that also you have to go and see. And other auditor reports say that credit audit report, NPA report, stock audit report, even stock audit report also you can find the income leakage. Suppose the stock statement has not been submitted on time, then the stock auditor will recommend the penal interest. Particularly if you are going for revenue audit, it is more than advances, because you have to, in all advances area, you have to verify. In all deposits area also, you have to verify. You have to verify all the service charges. So, but the fees paid towards revenue audit is very less. The fees paid towards the statutory audit is big. But the work involved in revenue audit is very, very big or huge. So you have to be thorough with the area of revenue leakage. And with reference to P&L account expenses side, it is interest paid on deposits, interest paid on RBI borrowings, interest paid on call borrowings, interest paid on other borrowings, and general charges. In general, what are the items that you have to take from the general charges that you have to see? Everything we will see in detail. What are the items that you have to see, that we will discuss later. Now, I am going for the interest earned on advances. The thing, read the sanction letter and arrive at the interest. Because an advance is being given by the banker to the customer. In for that, they issue a sanction letter. In the sanction letter, they mention the interest rate specifically. So you go and read the sanction letter, get the interest rate, and this has to be fed in the master record. It has to be fed in the master record, and you have to see whether the interest rate fed by the bank is correct or not, and see the modification done for every change or revised interest rate. So this rate, I already said, this interest rate will definitely change according to the repo rate. According to the change in the repo rate, they branches, they modify the interest rate. Last year, that is year 22-23, I think they have increased around 3.25% repo rate. I don't exactly remember the exact rate of increase in repo rate. Within this 3 months, they increased to something around 3% interest rate, or 3.25 something, they increase the repo rate. So this is the thing that you have to see. And next one is go to bank's interest rate pages, interest working sheet. So you can ask the bank. So even you can see, view it in the system itself. That's the last page. That is the banks, they are calculating interest rates. That's a separate page available. So you can go and view. If you want, you can download it. If there is any change, you can download it. But you have to see whether the banks have charged the correct interest rate. So at this point, this is audit point, you have to go and see the interest working sheet of the bank. You can ask. There you can find the thing. Next one is normal interest rate is applicable only for the regular or operative limit. It is applicable only for the regular or operative limits. It is not applicable for the for the OD. So suppose normally if the bank says that it is PLR plus 3, that means if it is 8% or 9%, that is a normal interest rate. And there is another interest called as penal interest, is also applicable for non-fulfillment of terms and conditions. So no excess interest rate is allowed other than those mentioned in the sanction letter. So the few branches, what they do in the sanction letter, they mentioned that advances has to be charged at the rate of 10%. But in order to safeguard the bank's interest, what the manager they do, what the branch they charge the interest rate at the rate of 10.5% or 11%. So it is a duty of the auditor to see no further interest, that is more interest has to be charged in the account. This point you have to see. And read the concession interest rate charge. So normally based on the rating of the rating exercise done to the customer, the interest rate may be reduced or further reduced. And even they charge even at par with PLR or even less than the PLR. PLR means prime lending rate. Even less than that also they used to charge. So you have to read the concession interest rate. So if there is any concession, the manager says that sir, the party is entitled to get the concession. That means the concession rate should be supported by the sanction letter issued by the head office. So you have to read the concession interest rate and then only you have to come to the conclusion. And what is the applicability of interest for term loans, regular and holiday period interest? So what is called as holiday period? This definition you should know. That means during construction, the party is asked to pay only the interest and not the principal. So if that is there, during the construction of house or importing a machinery from abroad or before installing a machinery, they say that the installation time, it will take time. It will be there. So during the installation time, that period is called as holiday period or gestation period or moratorium period. So three periods for the same word: holiday period, moratorium period, or gestation period. So for this, you have to charge the regular interest. Next one is for cash credit loan. If the account is regular, you can charge the regular interest as per the letter, amount stated in the sanction letter. And with reference to forex loan, it is packing credit loan or bill discounted. This is also regular, but this packing credit loan or bill discounting, you have to refer the forex circular there. From there, you can find the interest rate. And OTS order and the interest applicability. See, one-time settlement order. See, the bankers they fix the repayment date, and within the date, the borrower has to repay the loan. But when they arrive at the date, what they are doing, they are calculating the principal plus interest up to the date of OTS. So suppose if they are giving 3 months time, they added the interest to the original principal. So up to the date, the party has to make the payment. In case if the OTS is being delayed by 1 month or 2 months, the first condition is if the contract has been violated, then OTS order comes to nil. But bankers, in order to do the recovery, what they do, they add 2 months interest. Suppose if there is any delay of 2 months, then OTS interest is added. That is, interest beyond the OTS period is added, and it has been clapped to the OTS order, and the party has to make the order. So as an auditor, you have to, if there is any one-time settlement, you have to ask for the one-time settlement order and see the period. And if there is any violation of the period, whether the interest is being added before closing the account. This point you have to bear in mind regarding one-time settlement order. Next one is NPA. Regarding NPA, we will see tomorrow. But regarding NPA, interest should not be applied once if you identify one account as NPA, and you have to reverse the unrealized interest also. Next one is penal interest on advances. What is a penal interest on advances? Because if there is any terms if there is any violation of the sanction terms and conditions, the bankers, they charge penal interest. So here, for this, please refer the sanction letter. Normally, the penal interest minimum is 1% and maximum is 2%. I'll tell very important thing about the penal interest. The maximum is 2%. It is per annum. It's not 2% flat. 2% per annum. That point you have to remember. If there are some violation of some 2 or 3 classes, all this put together, the penal interest should not exceed 2%. Suppose for non-submission of balance sheet, 1%, non-submission of stock statement, 1%, non-submission of auditor certificate towards the data statement, that is 1%. All put together, the overall the penal interest should not exceed 2%. This point you have to bear in mind. And normally what the people they're doing, they apply penal interest as per, facility wise, it should not be there. So overall, the penal interest should not exceed 2%. This point you have to bear in mind. And it is 2% per annum. And installment is overdue. For the overdue portion, the system will charge the penal interest. Suppose if the overdue is for say for 32 days, for 32 days, the installment, that is penal interest, will be charged only for the installment overdue. It is not for the full loan. So this point you have to bear in mind. Next one is non-renewal of limit. If the limit is not renewed within a period of 180 days from the original due date, then penal interest has to be charged. Normally, the bankers, they are giving some short review. They are giving some short review. In case of short review, you have to collect penal interest even for the short review also. But bankers, they will not charge penal interest for the short review period, because any violation is in excess of the, that is the limit is not renewed beyond the due date level, penal interest has to be charged.
Sir, there is a breakage in the voice also, sir, due to net.
Sir? What's that?
There is a breakage in the voice, sir.
What's that?
There is a breakage issue in the voice, sir.
For me?
Yes, sir. I have facing the
Is it
issue,
clear
sir,
now?
in between.
Is it clear now?
Yes, sir. Yes, sir. Yes, sir.
Okay. So beyond this, I cannot shout. So non-renewal of limit also attracts penal interest. Next thing is drawing more than the sanction limit. Let us take the sanction limit is 10 lakhs. If the party has utilized 12 lakhs, for the excess 2 lakhs, they charge penal interest, and not for the entire 12 lakhs. Because the authorized limit is 10 lakhs, the irregular portion is 2 lakhs. Only for the 2 lakhs, you have to charge the penal interest. Next point is non-submission of stock statement, debtor statement. In case the party has to submit the stock statement within a period of 7 days of the following month, if there is a delay in submission of stock statement, say if the stock statement is submitted on 27th of the following month, then the penal interest has to be charged for the entire 27 days. It is not for 20 days. The stock statement has to be submitted on 7th of the following month. The stock statement is submitted on 27th. The penal interest has to be charged for the entire 27 days and not for the 20 days. This point you have to bear in mind. Non-submission of other statements, say in the form of financial statements, etc., or QA statement, etc. But if the bankers, they ask you to submit any other statement as per the sanction letter, and if it is not submitted by the party, then the penal interest for the non-submission of other statements, the bankers, they will charge. And non-creation of the charges, in the sanction letter, they will specifically mention that the charge has to be created within 30 days of the sanction of the loan. And if it is not created, then the bankers, they will charge 1% extra in addition to the regular interest. For that, also that 1% extra is called as the penal interest. And non-receipt of external ratings, this is a very, very dangerous thing. If the loan amount is above 5 crores, if the loan amount is 5 crores, above 5 crores, they, as per the sanction letter, the branch, they have to fulfill, they have to get the external ratings. Normally, this external rating people, they are charging something around 1.5 lakhs to 2 lakhs as fee. And it's a very big expenditure for the borrower. And that too, before availment of the loan, you have to get the external ratings. So that is to that extent, there's an expenditure for the bank, for the party. Normally, these external ratings will not be, produced by, they will not be in a position to produce the external ratings. So for the non-receipt of external ratings also, the banks, they charge 1% extra. So this will be clearly mentioned in the sanction letter. And others are outstanding balance in excess of drawing power. So outstanding balance, that is the outstanding, there is drawing power is 10 lakhs and the outstanding power is, outstanding balance is 11 lakhs. And for the excess 1 lakh, the bank will charge penal interest. And non-submission of financial statements, every financial statements have to be produced on or before 31st December of the following month. If it is not produced, then penal interest will be applicable. Next point is NPA on advances. So further interest has to be paid. And till the amount is being paid, though the account has been classified as NPA, they will have a mirror account. In that mirror account, the penal interest will be added. So this is also another important thing that you have to remember with reference to NPA. And pre-closure of advances. If you go and read the sanction letter, if there is any class specifically, that penal interest should be applied in case of pre-closure of the loans. In case of pre-closure of loans, you have to collect the penal interest. So this will be clearly mentioned in the sanction letter. Once again, I'll tell all the penal interest you have to get based on the sanction. Next one is others for non-fulfillment of terms and conditions of the sanction letter. Here, what the people will tell. There is one column. See, I have divided the sanction letter into 4 parts. In the general condition, there is one column. You please go and read the sanction letter. There is a general column. They say that if the borrower has not fulfilled the terms and conditions, then the branch has to levy 1% extra in addition to the regular interest. So if they levy 1% extra, all the other things, suppose if they are not submitted the stock statement, 1% extra. And if they are not submitted the financial statements as per the sanction letter, it is 1% extra. So no further interest has to be added, and the maximum penal interest is only 2%. And all the banks, what they do in order to to satisfy that the sanction terms and conditions have not been fulfilled, they charge 1% extra in addition to the regular advances. And in my experience, I can say that most of the banks, they are not charging this. And it's a revenue leakage. It's a direct revenue leakage. If there is any violation in sanction terms and conditions, the branch has to charge 1% extra. So suppose if the loan amount is 1 crore, and if the amount has not been submitted, if the sanction terms and conditions have not been fulfilled, say for 3 months, so they charge extra 1% into 1%. It works out to 25,000 rupees is the penal interest. So this is another important area wherein you have to concentrate. It's a penal interest that you have to charge. Next one is interest collected on interbank funds. So this is already morning itself I said sale of clearing funds. That means one bank has got surplus funds in clearing, and other bank, they want the funds. So they are selling the clearing funds to the other banker which needs the funds, because they have to meet the clearing commitments. So for that, they are charging 1-day interest. In case if the funds have been delayed by 2 days, one day fund is a leakage. So sale of clearing funds, it attracts interest, number of days given, and what is the return date. In case if the fund has been, the interest rate is collected for 1 day, and if the payment that with the assumption that the next day the fund has to go to IOB. Suppose if IOB has lent the money to say Bank of Baroda is paying 1-day interest to IOB with the assumption that this Bank of Baroda, they have to make the IOB's account on the next day. If there is a delay of 2 days or if there is a delay of 3 days, they receive only 1-day interest. For the delay of 3 days, that means additional 2 days interest is the income leakage. So sale of clearing funds also very, very important. This point you have to see. Next one is per lakh cost. Normally they charge 50 rupees per lakh or 40 rupees per lakh. It depends on the clearing base. So where the transactions took place, based on that they are charging it. Per lakh they are charging something around 40 rupees. Suppose if it is 1 crore, so the leakage is 400 rupees. So per day they pay 400 to IOB, and Bank of Baroda, they got the funds, and they have to make the payment on the next day. But if they are not making the payment for the next day, and if they are delaying the payment by 2 days, then they have to pay 800 rupees extra to IOB, or till such date they make the payment. So this is a revenue leakage. This is a very, very important area that you have to concentrate. and interest earned from RBI. That is interest earned from RBI. That is means bankers, they are selling the funds. Reverse repo rate. Lending to RBI. Banks, they are lending to RBI. This is called as reverse repo rate. And the banks, that is bank, they have to do the reconciliation with the RBI statement. Whether the interest is included in the RBI statement or not, that point you have to see. Reverse, that is reverse repo rate is very, very important. But this is very rare because nowadays banks, they are borrowing the fund from RBI and they are not lending the fund to RBI. Foreign exchange transactions. The foreign exchange transactions has to be conducted by only by the authorized dealers of the bank and authorized dealers of the authorized dealers who have been recognized or appointed by the Reserve Bank of India. Almost all bankers are coming into the category of authorized dealers. For that, they are charging some fees for buying and selling of foreign exchange. Say at the time of buying, they quote some rate. So at the time of buying, they quote only less rate. At the time when they want to sell, bank, they want to sell the forex, then they charge more. Suppose if it is 88 rupees and if they want to buy dollar, it will be 89. So the difference is 1 rupee. That 1 rupee is the profit for the bank. So this will be dealt, this will be done only by the authorized dealers. All the branches which are going for audit, other than the forex branches, this transaction you will not find. If you are going for any foreign exchange transaction branches, then you can find this income position. And other areas such as bill collection and bill discount. Suppose if any bankers, any branches, they got any forex transaction, and when they discount the bill and when they send the bill for collection, when they discount the bill, they took the interest in advance. That has to be taken to the credit of the P&L account of the branch. And when the amount is realized, then account is closed. So they took the interest in advance. So this will be reflected in the P&L account of the concerned bank. Commission and brokerage, checks and bill collection charges. Suppose if any check is sent for collection through the bank, then the bankers, they charge the check collection charges or bill collection charges. Luckily, as of now, I think this also you can expect in future. There is a talk that is going on. Even for the local check clearing, local check collection also, the banks, they have to start some charges. They have to, they will definitely levy some charges. Still, it has not been finalized. Soon you can get the information. That is check and bill collection charges and commission on RTGS and NEFT. If you do any RTGS and NEFT, the bankers, they are charging commission. And if when they want to issue the bank guarantee, that is bank guarantee, including the client period, the bankers, they charge commission at the time of issue of a bank guarantee. And in case if there is any contract entered, on behalf of the customer, for that also the commission will be charged by the bankers on the customer. And next one is LC commission. In case if any LC is required from the customer, the bankers, they issue LC, and at the time of issuing LC, they receive the property, they receive the cash margin, and based on that, they are issuing LC. For that, for the LC issuing period, it is not, they are collecting the commission. So this is very, very important. LC commission is also another additional income to the bankers. Share market brokerage. Few bankers, they are doing share market transactions. For that, they are charging some commission. That is share market brokerage. They are collecting from the customers who are dealing with the share market through the bankers. The commission received from the share market transactions is the profit for the bank. Next one is foreign exchange information. Suppose if anybody wants information about the foreign buyers, the bankers are in a position to get the information from the foreign countries. For that, they are charging some fees. That is called as commission. And for this also the bankers, they charge some very good fees, and that will be reflected in the P&L account. Say as an auditor, you have to see whether the bank has charged some commission for the sharing of information about the foreign customers, and all these commission and other details you can find from the service charges circular. Next one is commission on bank government businesses, say income tax payments, GST payments. We are making some advance tax payments. So for all this, the government is giving at the rate of say 0.1% or 0.2%. This is an income to the banks. And you can say that the money has gone to the current account of the government. So for the current account, bankers, they are not paying any commission, any interest. So this is also additional revenue to the bankers, but to carry out the government transactions, they charge some commission. This commission government is directly paying to the bankers. So government commission on government business. Next one is commission on other permitted agency business, including the consultancy of other charges. See, yeah, I can say one very important thing that the bankers, they are giving project consultancy. Even they are preparing the project reports and they are giving all the information about the projects. For that, they are charging some fees. That is coming under the category of commission. So this is a consultancy service charge. Consultancy services are also provided by the bankers. And brokerage on securities. In case if they are selling any securities, then the bankers, they are getting brokerage and fees on insurance referral. See, this is a business. This is called as bank assurance. Bank assurance. That means if the bankers, they are getting any insurance policy from their loan customers, they have to refer the policy to the insurance companies. The insurance companies in turn, they are paying the fees to the bankers. So in that manner of insurance referral also, banks, they are getting fees. And next one is commission on referral of mutual funds. That is sale of mutual funds also. The bankers, they are getting commission. And income from rendering other services like custodian, demat account, investment advisory, cash management, or other fees-based service charges. That is all the other professional works. Now the bankers, they have got the control now. So they are all the competitors to us also. Suppose they are also competitors to the insurance agents also. They are all competitors to the mutual fund agents also. Because bankers, they are doing the consultancy work. So bankers, they have got the information. Suppose if anybody wants to get a loan, the bankers say that, okay, sir, we will provide the loan, but you have to take insurance policy. So that will be added to the loan and they are sanctioning the loan also. So bankers now, they are the direct competitors to the insurance agents, mutual fund agents, even for all even for the share markets brokers also. So okay, this is the income that they can get from the advisory services. And processing fee, this is very, very important. Whenever any loan is being processed, the processing fee will be levied and it has to be paid by the customers to the bankers. So the bankers, they charge and collect the processing charges as per the sanction letter or circular. What circular says, that has to be paid by the borrower. Even now, the banker, when they release the loan, the system automatically debits the processing fee. The system automatically debit all other document charges and everything. So processing fee at present, only the auditor duty is to see whether the current processing fee is being collected by the bankers or not. Sometimes they may waive the processing fee in case of housing loan. If any housing, that is for the waiver of housing loan, then they will mention the period, say 1 month or 2 months. After that also, if the system is not updated, then the processing fee will not be levied. So it's an income leakage area. So as an auditor, you have to see whether the processing fee is being collected as per the norms or not. Next one is see whether there is any concession is given in the processing fee. Special sanction must be there. The banks may waive some processing fee even after. So during some period, they waive some processing fee. That for that, a special sanction is required. So you have to see whether there is any concession or not. And upfront fee. What is upfront fee? That is at the time of submitting the loan application itself, the bankers, they collect some upfront fee. Whether the loan is being sanctioned or not, you have to make the upfront fee. Once if you make the upfront fee, it will not be refunded. It will not be refunded. If any borrower say this, you have to make the upfront fee. You have to be very, very careful. Suppose if any of your clients came and they ask, sir, there is an upfront fee that is being asked by the bankers. So can I pay? You have to be very, very careful whether they actually sanction the loan or not. So this is what all NBFCs they are doing. NBFC, they say that you have to pay the upfront fee, and this upfront fee will not be refunded to anyone. And for the following loans, processing charges has to be collected for term loan and housing loan and personal loan, cash credit loan, whether it's a new loan or renewal loan. Even for the renewal also, they have to do it. And forex loans, bank guarantee, and other advances. And ad hoc sanctions. Suppose if the branch has sanctioned, suppose if the party has got 10 crores limit and the party wants 1 crore as ad hoc for 90 days. So pro rata processing fee has to be charged because the funds have to be utilized for 3 months. So what is the 1 year processing fee? And if it is used for 3 months for the ad hoc loans, you have to collect the processing fee. So there you can find some income leakage. Banks, they are not charging processing fee for the ad hoc sanctions. This is also income leakage area you have to concentrate. Next one is inspection charges. Normally, the RBI says that inspection charges you have to collect according to the time spent by the officials, and this is based on the salary earned by per day salary earned by the officer. Suppose if the officer spends 1 day to go to the unit, 1 day he spends to go to the unit and come, and that 1 day salary has to be recovered from the customer. So this is a basic thing, and few bankers differ. You have to pay 2,000, you have to pay 3,000, but everything it depends on the service charges circular. So for this, please refer the sanction letter and circulars. Next one is minimum 4 inspection the manager has to go, that is quarterly wise. So normally whether the manager is there going for the inspection or not, on a particular days they charge the inspection. But you have to see as an auditor, you have to call for the inspection register and the date of inspection you have to see. Sometimes they go for more than 1 inspection per quarter, they go for 2 times or 3 times. Even for that excess 2 times or 3 times, you have to collect inspection charges from the customer. It is an income leakage area. So as a concurrent auditor, if you're a concurrent auditor, you have to see this, how many times the manager has gone for inspection, whether it is for 3 times or 4 times in a quarter. For the normally the system charge only once. The manager goes for 2 times or 3 times. You have to collect the inspection charges for the additional visit also. And see, those are debited in the customer's account. Inspection charges, inspection activities are being carried out by the bank, but all those charges have to be debited in the customer account. Refer inspection register and the branch and see the branch has charged on all those dates with reference to inspection. This is what I said. You have to refer, there is an inspection register. That whenever the manager goes for inspection, he has to update the inspection register. You have to see whether the inspection charges have been debited for all dates where the manager has gone for inspection. I can vouch you will get lot of income leakage in this register. So this is also another income leakage prone area. What are the other charges? So mobile banking fees, they are charging. Credit card and debit card charges, locker rent. This is very, very important. So you have to calculate what is the total locker, what is the total number of lockers, what is the category, A category, B category, small, big, small, medium, and big. What is the rent due for this? How many lockers are vacant? How many lockers are utilized? What is the amount due to be paid? With reference to used locker, what is the amount actually paid? Is there any leakage? Is there any leakage? If there is any excess receipt or short receipt, everything that you have to find from the locker rent circular. Everything you have to work with reference to locker rent calculation. And renting a property, sometimes the bankers, they are owning the property. Suppose if there is any big properties there, some shops have been let out. whether the rents have been received by the bank from those parties or not, that you have to see. And for that renting of properties, you have to see the rent agreement, and whether the branch has received any advances, that has to be added, that has to be clearly mentioned in the balance sheet. So you have to see the rent agreement, what is the total rent that is due, whether the same rent is being received. Sometimes they say that within 3 years they have to increase some 10% proportionately, and normally this will not be given effect in the bank's P&L account. You have to see whether the rent has been received as per the rent agreement or not. Next one is service and transaction of banking charges, including the charges levied in transaction at the other branches. So normally when you go to the bank, if you want to make a deposit of 1 lakh, and say that, sir, only if you want to remit our bank's transaction, you can remit any amount of cash. But if you want to do the transaction on behalf of the other branches, they say that only up to 50,000 we will not levy any charges. If the amount exceeds 50,000 rupees, we will levy the charges. So this point you have to see, if any transaction of the other branches that has been carried out at the branch, they have to levy the charges. And profit on sale of investments, that means they have invested some investments, and if there is any profit, suppose if they invested around 10 crores in any investment as per the head office guidelines, and if they sell the investments, and if the investments are sold for 12 lakhs, that 12 crores, that 2 crores have to be added to the profit of the P&L account. Here, one has to remember whether the investment is made on behalf of the branch or on behalf of the head office. If the investment is made on behalf of the branch, then only the profit goes to the branch. Otherwise, it has to go to head office. This point you have to remember. Next one is profit or sale on revaluation of investments. So if there is any revaluation done to the investments, it's a provision entry because it is not an actual entry. The provision has to be made at the branch level. What are the other charges? Profit on sale of land, building, and others. Suppose if the banks, they are selling any land or building or other assets, that has the profit has to be booked to the P&L account or credit side. Profit on loss on charge of revaluation of fixed assets, income earned by way of dividends, etc., from subsidiaries and joint venture abroad or India, that also you have to give credit to the P&L account. And solvency certificate issued by the charges. See here, this most of the bankers, they are not charging the solvency certificates charges. See, if you go and get the same thing from the revenue authorities, they charge some fees. But with reference to bankers are also entitled to issue solvency certificate. For that, as per the service charges circular, they have to collect it, and you have to ask the manager, sir, have you received any issue? Have you issued any solvency certificates? You have to charge the fees. And my experience, I will tell, only 50% of the solvency certificates are coming into the picture, but 50% they are not recording it. But there is one register called solvency issue register. You have to call for the solvency issue register and see whether the solvency issue certificate fees have been received by the branch or not. For this, you have to refer.
Sir, video is in
Yeah,
stuck mode.
just hold on, that's why I said, one second. Is it okay, sir, now? Hello? Sir, is it okay? Okay, sir. Because suddenly the network has gone. Now, okay. It's a solvency issue certificate. Am I audible, sir? Now, am I audible? Am I audible, sir? Yugandhar Reddy and yeah, Jayabal, sir. Okay. And solvency certificate, solvency certificate that you are to verify whether the charges are not are there or not. Next one is you have to go for the commitment charge. The commitment charge that you have to see. What is meant by commitment charge? Do you have any experience about this commitment charge? Any member they've got any experience on commitment charge? This normally we won't see. What is meant by a commitment charge? Any experience? Any members have got the experience for it? Loan sanctioned but not dispersed. No, sir. Jaybalan said loan sanctioned but not utilized. It is dispersed, but it is not utilized. So this is what you have to see. Loan dispersed, but not utilized. That is coming under the category of that is what the commitment charge. Commitment charge. Suppose if the loan is 100 rupees, the party has to use minimum of 18%. That is called as if the amount is not utilized up to 80%, then the bankers they charge additional interest towards non-utilization portion. For this, there is a one bank say that if the limit is 50 lakhs and some other bank they say that it is more than a crore. It is a more than a crore. There are situations like that. So commitment charge you have to verify. You have to verify and do it. And miscellaneous income. Other than this, everything will be coming under even sale of old newspaper. There is every branch they are subscribing the newspapers, and all the sale of newspapers you have to old newspaper you have to book it in the miscellaneous income. Miscellaneous income means other than this any income that you can add. Next one is issue of MICR checks. Then what are the miscellaneous income? That also I have listed. Issue of passbook, balance certificate. Sometimes they ask for the balance certificate. Sometimes they ask for the stop payment instruction. Next one is balance inquiry. Suppose they ask what is the balance. So normally they charge, okay, I am ready to give you the balance figure, but you have to pay me the fees. Next item is account closure before 12 months. Suppose if you open a savings account or current account and if it is closed before 12 months, the bankers, they will definitely charge some charges. That is account closure before 12 months and check return charges. For every check return, they are charging something around 100 rupees or 250 rupees. For this, you go and take the check return register. In that check return register, what is the account number? Whether the check return charges have been properly recorded with the in the respective account. So there you can find the check return charges and signature verification. Sometimes the bankers they have to attest the signature of the borrowers. So that for that the bankers they will charge the miscellaneous income and no due certificate. Sometimes if the bankers they want to get a loan from some that is borrower, if they want to get a loan from others, they have to issue a no due certificate. And if they are going for any contract also, the bank, the contractors, there is government insists that you have to get a no due certificate from the bank. And issue of demand draft, pay order and banker's check, even the duplicate of, even the revalidation of DD or postal order and bank charges. What is the lifetime of your DD? Is it 90 days or 3 months? Is it 90 days or 3 months? Revalidation of DD, that is DD has got a validity period of how many days? Is it 90 days or 3 months or 6 months?
3 months, sir.
It is 3 months. It is not 90 days. So you can find a system error. You can find a system error. You go there and your DD is dated 8/2/2023. If you add 3 months, what is the due date? It should be 7/5/2023. It is not 8/5/2023. If it is 8/5/2023 means it is 3 months, 1 day. But the system passes the DD or check. So it's a system weakness. You just kindly go and verify the dates. And another thing is, for re-evaluation of DD, they will charge. For issue of duplicate DD also, they charge. And collection of checks, if the checks have been sent for collection, there also they will charge. And collection of bills and purchase of DD and outstation checks, for that also they are charging it. Another miscellaneous income is presentation of USAN's bills. And if non-maintenance of minimum balance also they charge. And number of entries exceeding 50 in SB. So people, what they do, I want to open SB account, I want to do all the transactions in SB, but the permitted limit is 50, but it varies according to the bank. Some banks, they say that only 25 entries are permitted in the SB account. Some bank, they say that 75, but everything, it depends on the banks. So if the entries exceed maximum of 50, they charge some 2 rupees per transaction. And charges for deletion of deceased person's name and change it. It is very, very simple. The deposit is in the name of the deceased person. You want to change the name from the deceased name to your name. For that also the bankers, they are charging. Standing instructions. Every 3 months, you have to transfer the money to LIC. That is a standing instruction. They are charging something around 5 rupees or 10 rupees per standing instruction, that you can find from the service charges circular. And cash handling charges, safe custody of charges, and collection of interest and dividend, and charges for transfer of shares, locker charges, and locker operations. So this is also very, very important. So per month, you are allowed to do the operation to the maximum of 12 days, 12 transactions. If you are going on doing the locker operation more than 12 times, then charges at the rate of 100 rupees will be levied. It varies from bank to bank. So you have to go and see the locker pages and you see the locker operations. If more than 12 locker operations are noticed in that locker, you have to go and recommend for the recovery. And in case if the lockers, if the locker keys have been lost, then that is break open charges. The bank, that is borrower, that is locker owner, has to make payment to the bankers. They will charge break open charges. Next item is solvency certificates, then interest certificate and remittances of RTGS and NEFT, and account maintenance charges, ATM charges, duplicate deposit receipt. If anybody wants to get a duplicate deposit receipt, for that also they will charge the payment. And payment of deposit amount through other banks. And now, so far we have seen the income that is coming to the bank. Now we are going to the debit of the P&L accounts. That is the expenses done by the bankers. First thing, they make a deposit payment of, that is interest on the deposits. For this, please refer the head office circular and see whether the payment that they are making to the normal citizen and senior citizen, and payment they are making to the SB account or current account. And in one of the cases, I found that the deposit rate, that is the staff has to be paid additional interest of 1% or 0.5% than the regular interest rate that is being paid to a normal citizen or senior citizen. I found that the staff interest rate is being fed into the normal citizen and senior citizen. Suppose the normal citizen has to pay 7%, then the staff has to be paid 8%. That staff interest rate is being fed into the normal deposit, so that the banks, they have lost huge amount. So this point you have to see what is the interest rate that is being charged or paid by the banker to the normal citizen or senior citizen. And if the staff interest rate is being fed into the normal citizen, senior citizen, bankers, they are at the loss. You are going for the revenue audit or concurrent audit, you have to be very, very careful. And SB, for SB account and current account, for SB account, they are charging interest. For current account, no interest will be paid. And fixed deposit, reinvestment deposit, recurring deposit, FCNR deposit, NRE deposit, for inoperative and overdue mature deposits also, they are paying, provided that has to be operated. Then only interest has to be paid. In case if there is any closure of pre-closure deposits, in case of any pre-closure of deposits, the bankers, they charge 1% extra. 1% extra. Here I have received a question from Ramachandra. There are numerous transactions just per customer. Then how can we find the transaction charge in the limited period of audit? Sir, this there are numerous transactions. So you go to the SP account, you can find how many accounts are there. There you can find. So the system says that it is 50 accounts or 100 accounts. From the system itself, they charge. So you can view from the system whether the system has charged the transaction charges. There are numerous customers. It is only a test check. The auditing with reference to P&L account during the statutory audit, it is only a test check. It is not 100%. So you can have some test checking, and you can say that on test check, I found this mistake. So in case a deposit is being pre-closed, then the applicable period, interest applicable for the running period minus 1%, you have to make the payment to the customer. Next item is TDS applicability. In case if there any deposit has to be, any deposit interest, the TDS has to be paid, then TDS has to be deducted. See here, you have to go and see the system. The TDS, after deduction of TDS, the interest to the extent of TDS, the interest goes out of the business. But the system, what it will do, now it has been set right. Previous days, what they do, deposit amount is here. They added the interest. They paid the TDS. What the system says, what is the closing balance? What is the TDS amount paid? It deducts and makes the payment. But you have to see to the extent of TDS when it goes out of the area, that to that extent interest should not be given credit to the account. But the system generates interest separately. The system generates TDS separately. Only the net figure they are giving. But it is not giving effect to the interest that has been lost due to the payment of TDS. Now everything is set right. So TDS, if any interest TDS deposit is there, that is interest paid on TDS is there, you have to test check some few items whether the TDS payment has been considered. That is, interest has to be considered after deducting the TDS amount. That means there should not be any effect given to the extent of TDS money which has gone out of the bank's profit. And this is if you want, you can take a screenshot of this. This is the way in which you have to calculate the reinvestment deposit. That is R divided by 4 plus 100 into enter directly the principal amount. Suppose if you are having calculated, you can take the calculator and you can utilize, you can memorize this formula. Press for the number of quarters. Rate of interest. This also I'll share it tomorrow. I will share it tomorrow to you. That means after tomorrow, that is day after tomorrow, I'll share this. The rate of interest is 12%, and the deposit amount is 1 lakh. The deposit amount is 2 lakhs. Say 10 lakhs. What is the loan amount? Say 12 divided by 4 plus 100. You have to press 2 times into. So the interest rate becomes constant. Directly you fed the principal amount, say 1 lakh. And if it is for 1 year, you have to press the percentage for 4 times. You have to press 4 times for the quarters. So the maturity value will be coming at the rate of 1,12,550. That is, the interest amount is 12,550. This is the formula that I learned from a substaff of your PUN, substaff of your bank. That is, from a PUN, I learned this formula. So this will be useful to you. In one of the banks where I use this formula, I found that in the other bank, I say that the banks have made the excess provision or short provision. And even for my deposits, which I made in one of the banks, I found that the bank is giving excess interest. So I have checked this, and I have informed the head office say that your interest working is wrong. So the bank they have already lost something around 220 crores by way of excess payment. And by when they apply this formula, the interest rate has to come, and they check the software also, and they found that it was a mistake. So I have given this observation to the other bank, because though they have given me excess interest, I reported that your software is wrong. So this formula you have to remember. Next one is interest paid on RBI borrowings, that is repo rate. Next item is interest paid on call money. You have to see the head office authorization letter. That means you have deposited, you have given the money to someone as per the head office authorization. For that, you have to collect you have to pay the interest. That means someone has, you have got the money from someone. For that, for short term, you have received the money. For that, you have to pay the interest, and this should be based on the head office circular. What is so? You make the payment, and for that you have to see the head office authorization letter. What is the maximum interest that you have to pay? And in case if the banks they are charging overdue interest, that is also you have to verify. Interest paid on borrowings borrowed otherwise than the than as deposit, borrowed from the bonds, and borrowed in the form of debentures. For everything, the banks they have to make the interest payment. And for other borrowings, say in the form of, sometimes the bankers they borrow the money on short term period. So suppose in case sometimes other banks they are also coming and lending they put the deposit in this bank. For that they have to make the payment. So whether the interest paid to the other bankers are correct or not, that you have to see. Everything you have to check from the profit and loss. If there is any payment, first you go and see whether there is a check that is available in the P&L account or not. What are the general charges? That means the banks now they have to make the payment. Paid, that is, it is nothing but the debit of P&L account under the head general charges. That's just I'm highlighting the important items. That is, if you make the payment towards the employees and rent, taxes, lighting, printing and stationery, advertisement, publicity, depreciation on bank's property, director fees, allowances and expenses of auditor fees and expenses. This auditor fees, only the head office is making the payment. Director fees, it is related to the head office. Depreciation, it is related to head office. All this except salary, rent, that is branch area, rent, taxes and lighting. Printing and stationery, the head office, they will send a portion of the printing and stationery, that is share by way of debit note. And advertisement and publicity, the branch can make the advertisement and publicity only after getting permission from the head office. If you find there is any advertisement that is there in the P&L account debit side, please ask the manager to produce the evidence, because the regional office has to give the permission. Depreciation on bank's property, some banks they took the account at the head office level, or some banks they pass on the entry to the branch level. And director fees, allowances, expenses, auditor fees and other expenses have to be borne only by the head office, and it has to not to be borne at the branch level. Suppose if there is any stock audit fee, the stock audit fees have to be borne by the customer and not by the bank. And in case of revenue leakage, the fees has to be paid by the branch, but they have to get their permission from the head office. To that extent, you have to pay the fees. Next one is law charges. If there is any case has been filed on behalf of the branch, then the branch they have to pay the law charges. Sometimes these law charges, if it is the law charges are subject to the bank's property, they can have a debit. In case if there is any for any suit filed upon, if the law charges have been paid, then the debit has to go on to the customer account and not to the P&L account. So you have to verify the law charges on behalf of whom the law charges have been paid. It is also another leakage prone area. The bankers, what they do, they make the payment to advocate, and the payment has to be debited only to the borrower's account, but they debit the bank account, bank P&L account. So you have to reverse the entry, because to that extent the law charges have to be borne by the borrowers and not by the bankers. See, the purpose for which the law charge is being paid, you have to kindly go through it. And postages, telegrams, telephones, and repairs and maintenance and insurance and other expenditure for this please refer the cash return. So there is a separate, just like petty cash records, there is a cash return. There is a cash return you have to ask. You have to go through all the entries. I can vouch that the capital expenditures have been included in that cash return. Suppose if they buy any motor, any electrical motor, they debit the cash return. They debit the cash return. This motor, electrical motor, is the asset for the branch, asset for the bank. So they debit the cash return. So this capital expenditure should be capitalized. So see the materiality of the amount. There you can make the decision. And if you do this revenue audit correctly, so before you do the revenue audit, just like bucket, everything is slipped. And now after the audit, now the bucket is good and all the leakages that you have found. So this is what I want to say about the revenue leakage. I think almost I have touched all the points of revenue leakage. It's a very, very important thing. For the statutory audit, it is only a test check. You can take the cushion, but one point that you have to remember is this is a test check and you have to maintain all the working papers correctly. Otherwise, you will be in danger. This is what I want to tell about the revenue leakage. And now the time is 8:30. I think I can close the session today. And tomorrow we'll come back by 8 o'clock and we will do it. And remaining whatever I plan to give to you, I will cover tomorrow. And tomorrow morning, I'll start with NPA, which is very, very important. I'm going to start from zero. Presume that you don't know anything about NPA. And definitely when I end the session, you will be a master of NPA. I've already shared all the NPA circulars to you. If you got any doubt, you are welcome. You can put it in the chat box because already time is 8:30, 8:35. And we will see if there is any left portion. Tomorrow I will complete everything. And if you got any doubt, you are welcome.
Thank you very much, sir. Had a wonderful session, and thanks for your patience and educated us. Thank you, sir.
Right, sir.
Good night, sir.
So
Good night.
I am just closing the session. Tomorrow morning, exactly 8 o'clock, we will assemble. And if you got any doubt, you are welcome.
Thank you. Good night, sir.
Okay. Good day, sir. Thank you. Thank you very much. I'm closing the session. Tomorrow we will meet.